what to improve on the next day.
And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good afternoon, friends and traders. Welcome to Limit Up Podcast. I am Dan Hodgman, sitting down with
Jack Pelzer. Take two. Let's do it. We're debuting some new technology here that we're hoping to employ soon, but we got to work the bugs out, so no better time than the moment, Dan. How you doing?
Exactly. We got the gremlins. I'm good. Jack, let's get back into it. We tried this a minute ago. We're working now, but stocks are moving.
They sure are, and in the right direction. Also, I said a bunch of boring, stupid stuff before, so now I'm going to do it better, I think, this time. Big stories, the NASDAQ today. Since the closing bell yesterday, NVIDIA added $250 billion with a T. That's one followed by 12 of market cap. As I said before, that is equal to a full Costco, a full PepsiCo. It is more than a Netflix, added by one day to the company that creates chips that are fueling our AI overlords. Dan, NASDAQ.
Or we can call it one Elon Musk net worth, right?
Yeah,
right
one
there.
Musk. We can measure it in that.
We'll call it a Musk. They earned one Musk last night.
One Muskaroo. And Musk's having his own problems. We'll go into that in a bit. This is astounding. It's pretty much the biggest that I know of one day add in market cap for a company. And as I mentioned earlier, pretty much the whole difference in performance between the ES and NQ today, a full 1.5% of the NASDAQ move today was because of NVIDIA adding all that money, which is astounding. So hence NASDAQ's at 52-week high, I think. It's going back to, took out the high from, the next things to look at would be, it took out the high from August of 22. The next mountains decline would be 15,260 from March 22nd. And the big daddy of them all, the high close was 16,382 on November of 21. In case you top ticked it, 16,767.5 would be the all-time intraday high. So if you bought that, my condolences. But it's coming back.
We're working our way back. If you've withstood that heat, good on you. Cutting some of those losses at this point. So you talk about NASDAQ, you talk about S&P a little bit. Everyone knows I'm a big crude guy. I've been very active in crude. In the first attempt of this stream, you poured salt on an open wound still about my gap issue with the crude oil. Crude oil really has been playing table tennis or paddle tennis, as we were saying before the stream even began, really floating that $70 to $74 range, up and down 2 to 3% on a given day pretty consistently. I will say this, just seeing a really weak day like we saw today in the crude oil, down about 2.5%, leading into one of the bigger holidays of our United States summer, Memorial Day weekend, to see that market giving up a little bit. That's giving me a little bit of insight into potentially how this summer may go with crude oil. Yeah. Obviously, we got to see acceptance below that $70 mark. We want to see some trade below 70 in the $60 range to see it break down. But, that's something you want to think about, right? Supply and demand for a commodity like crude oil. Summer months usually increase supply. When supply goes up, price goes up. Or demand. I said supply. I meant demand. When demand goes up, price in theory will go up. So we're going to have to keep a close eye on that one this summer. We know there's a lot going on in the crude oil world. Biden's talking about refilling the U.S. petroleum reserves, which will impact this crude oil price as well. So some good opportunity out there across the board. And as we head into a nice holiday weekend.
Yeah. Well, let's take a look at the ES. There's this incredible triangle going all the way back from October of last year that we're still in that sort of, we're condensing there. 4,200, it has loved to bounce off of. It's obviously lower than the NASDAQ. It bounced off the 50-day average pretty much to the dime yesterday. So that's something to keep on your charts always. 5,200 day is what I have on mine. Right now, you got any thoughts on the ES? A little more.
Yeah, I do, Jack. You're talking about the 50-day. I'm looking at this 4150 range. It has been pure consolidation, a lot of activity, a lot of price action in there. So continuing to keep an eye on that 41 to 4150, or we can even bring it up to, I don't know if I'd go as high as 4,200 on my short time frame range. Again, I'm looking at daily charts. I'm not getting too granular. I'm not looking at the 30-minute by any means. But when I look at 4150, over the last, I guess we could call it this last month, that has been a high congestion area, a lot of activity and a lot of price action in there. What does that tell you? It means it seems like it feels like a very stable price, 4150. The market really likes that. Buyers and sellers are pretty comfortable at that range. So
very comfortable.
When you see less price movement and you see a price stabilize like that, and again, 50 points in the grand scheme of things is nothing in the S&P. That to me is really where that indication comes from. I'm going to keep a close eye on 4150 in the S&P.
We are running out of higher lows in that range, though. I mean, going all the way back to, look at my chart now, going all the way back to September of last year, we've had 1, 2, 3, 4, 5, 6 assaults at around 4,200. None of them have gone. And now the lower highs are getting closer and closer to that. So, like I said last week, are we going to cross the streams right when we either default or get a debt ceiling deal that'll take us to the next level? Because that's what the next news coming down the pipe is. And guess what, y'all? It's got to happen in the next week, one way or the other.
And this is a prime example of one of my favorite things that can happen in trading.
Yeah.
Every trader out there loves a breakout move. They love seeing the big moves.
They're sexy. Everyone loves a breakout move.
Looks good. There's a lot of money to be made. There's a lot of money to be lost. But essentially what we start to see happening is when we're starting to struggle to make, when our higher lows start to get too tight, we start to see a compression. I view everything in I'm a simpleton. I like to keep things as simple as humanly possible when it comes to trading. And we're starting to see compression. And imagine it like a car spring. That front shock on your car, eventually you push it together, eventually gets to a point where it can't compress anymore and it has to release that tension. We're seeing that right now in the S&P.
Will says, if 4159 holds tomorrow morning, I'm buying and closing my eyes until 309. Honestly, I don't hate that play because the danger right now, we know the debt ceiling is happening, but it's not going to default tomorrow, right? So I think that the big surprise that's still available is to the upside. Definitely keep your stops in, especially if you're in a short trade, because I think in the next few trading sessions, the surprise, the phase ripper would be to the upside. Now, come next week, sometime in June, then we might flip on its head, right? As we get closer to that X date, things could either be like, oh, it's falling apart, or who knows? We've never defaulted before. I don't know exactly how this is going to work. But then I would flip and say, don't put in, like, one thing I say on the upside, like he said about 309, I think that's a good idea because like I wouldn't be playing around with having like profit targets in there to the upside necessarily. If there's a possibility you can catch the big move. And then next week I'd be not really having profit targets necessarily to the downside, unless you got to, leave or do something, but you do you.
Yeah. I mean, in reality, if we see a breakout to the upside here, we have a lot of room for this market to move. I think 4,200, Jack, you've talked about 4,200 for months as a level that you've liked. If we get a move to 4,200, Will, you're looking at a 41 point move there. That ain't a bad day trading the S&P, in my opinion.
Yeah, and we haven't held above. I'm trying to see if there's any closes. It looks like, recently there was maybe like one close. There's really only one or two closes above 4,200 since back in September last year. And it's crazy. That's such a rock solid thing in the sand. And I think the debt ceiling is going to break it because I think personally they're going to figure this out. I think that they have to. I have to believe it.
I think so. And I just got word from producer Holden. My audio didn't sound great. I didn't have my microphone on, the right one. So now the right one's on. Hopefully I sound a little better.
I knew you didn't, Dan. I just didn't want to say that, you sound like shit, but that's true.
Do I sound better now?
Oh yeah, you sound great now. I was
Oh, good.
wondering
Well,
what
thanks for letting me know, Jack. Thanks for making me look bad. Um,
you sounded like DeSantis on Twitter Spaces yesterday before.
I didn't see that.
Yeah, they had some technical problems. And everyone out there, we're sorry about these technical problems. We're trying to improve the product. I think this is eventually going to work much smoother.
I mean, just look at this down below. This is pretty awesome. I'm mirrored, so but this thing down here, that looks pretty cool. We got new names. Where's my hand? Right there. We got that over my head over here. Man, this is embarrassing.
I'm sure this is riveting for people listening in an audio format. Dan is just moving his hand slowly around the screen.
I apologize. Anyhow, Jack, you bring up the debt ceiling. I think that is a nice little talking point about summer, right? Historically, this going into this weekend is when everything for summer changes with trading, has historically changed. The introduction of technology, the introduction of screen trading has really changed how summer trading takes place. Historically, things are pretty quiet. I mean, I can attest growing up, my dad was a floor trader. He didn't work Mondays. He took most of his Fridays off, and he condensed his trading into 3 days during the week. That was commonplace. Now we have computers, we have internet. You can hotspot your cell phone pretty much anywhere in the country and trade on your laptop. We've seen YouTube or Instagram reels of Michael trading on the plane. Trading has become so accessible. So it's important to think about that type of stuff coming into summer. Now, summer trading changes for sure. There's no doubt about it. Things are going to be different. There are still going to be quiet times, a little bit more common now with it being summer, but there's going to be a lot of opportunity this summer, which I'm excited about.
Yeah, and the classic saying, so to speak, is just because you can doesn't mean you should, right? Just because we've opened it up to 24-hour essentially trading. I know that Robinhood, I believe, is doing that on a bunch of their stock offerings. Doesn't mean that you should, and I think that's going to be something we talk about a little bit now. So 3-day weeks during the summer doesn't sound terrible. I remember we used to just kind of kick off at about noon on Friday, unless you had a position on. Is that still the case? Do we see what's volume sort of been like recently in the trading combine or stuff like that?
Yeah, I mean, trading combine, I see, I think in the trading combine, we see a little more activity than we do in the regular markets, which is fine. I think, shutting off at noon on a Friday should always be a mentality. I think 12 months a year, pushing it much further than that. And I personally I have paid the price of trading too late on a Friday. I've been told to leave at 10 a.m. I chose not to. I turned a good day into not a good day. I've done it before, and that was one of my big lessons. So you're never going to find me active in anything on a Friday unless I'm in a position, I'm in the money in that position, and I'm just working to get out of it. You're not going to find me entering new positions. I think that's the difference here. Like if you're in a good trade, just because a certain time hits and you still can be there to trade it, by all means, stay in your trade, see if you can get to that profit target. If it's sitting back, just closing out at 309, sure. But entering new trades as that Friday continues on, I think it's important to think about that. And remember Mondays, next Monday is a holiday, Memorial Day. Don't forget what that one means. So Monday is a Memorial Day holiday. It's going to be quiet. Don't even think about it. And I think you want that to be your mentality throughout the whole summer. My biggest thing when it comes to trading is our expectations and our, goals should not be hit during summer months. Let's get out and enjoy it, because the most important tool we have in trading is ourselves. We're the ones clicking the button. We need to be sharp. And when it's 85 and sunny outside and you can be outside, vitamin D is so good for you. Get out and get a little bit. It restores your mental state, just getting out in some sun. I cannot stress that one enough as we get into summer.
Oh, absolutely. I'm seeing it right now. I got to sit here it looks so nice and green outside right now. Don't sit all day in front of this computer like I do. I'm going to get out as soon as I can. But do you feel like we've been in a little bit of sort of a summer doom loop, like where what you said is absolutely true historically, right? People take it off more and things like that. But it seems that since, the last 5 years, and I don't know if it's just because everything's so instantaneous now with like we're just constantly being bombarded by media of various things that there hasn't been as much summer chill. I know part of it was COVID, but like it just seems like there's always something to be worried about in the markets in a way that there's no chill anymore.
Jack, when we first started doing content at Top Step, 5, 6-ish, about 6 years ago is when we first started launching any sort of content. And I can remember about this time 6 years ago, we did a coach's behavior or a trading behavior, or a coach's playbook or trading behavior. Those were trading behavior was an old segment of ours too. And that was the theme, was like summer, slow down, step away. Don't expect much activity. The next year, I can remember sitting down 5 years ago and going, holy cow, we have a lot happening this summer. It's not going to be a standard summer. This is going to be an anomaly. And ever since then, it has pretty much been the same. There's a lot of
I'm sure Mick will love that. But yeah, I get it.
It's almost like our old days when you used to have to call your broker and say, hey, can you buy 5 for me on the open? So I think it says no sound. Uh-oh. Can you guys hear me? Okay,
Yeah.
awesome. So, that's the big difference is we now have access, but don't mean just because there is access does not mean you um you should be trading.
Right. And I think even if you're someone that wants to trade all the time, you just have to, like we always say, the market's going to do what the market's going to do. It doesn't really care what your thoughts on it are, is you should be paying attention. Like if there's volume, liquidity, and movement, by all means trade it. But it's sort of a self-fulfilling prophecy when we're saying to like take it slower during the summer, because even if you want to try as hard as you can and spend all day sitting in front of a screen, if the market is just kind of chopping around and not super high volume and stuff like that, you're probably not going to get the same results. Now, if you have a strategy that's working for that, by all means, keep pushing. I think I said last week that my biggest regret about my career trading was not pushing as hard when things were going well, because the times will come when it's not doing well. The corollary to that is the reverse would be when things were going poorly. I wish I had sized down more. I wish I had traded less. And it seems like, oh yeah, of course that makes sense in retrospect, but no, like in the time you can tell when you're killing it. The stats are there.
That was kind of the next thing I was going to mention, Jack. I mean, the important thing when it comes to summer is, and I tell this to anyone I talk to, set your summer plans on your own accord, plan it on your own, try it on your own, or set it to how you want to trade it. If you don't want to trade a certain week, plan that ahead of time. Don't get to that point and go, I don't want to trade right now. Let's already pre-plan those times that you're going to take off, get yourself mentally prepared. And obviously if you're on a heater, that's when you can shift. But if things are, you're consistent, you're smooth, everything's good, take some time off for yourself. Restore your own energy. And remember, we're not trading to live, we're trading to create opportunity. I think that it gets forgotten so quickly that like everyone wants to trade to become their own boss. And the last thing you want is a boss that's telling you got to work 5 days a week, 12 hours a day. I don't want you getting up from the screen. If you were working for someone else, you'd be looking outside going, man, I really do want to go enjoy the sun. I mean, it is gorgeous here right now. And I can't wait as soon as we're done to get outside. And those are the things that you want to do for yourself. Get outside, remind yourself that you are the boss and you can take some time off.
And when you do take time off too, don't fall into some sort of FOMO situation. We were talking to Jared Tendler earlier today, and this kind of came up that someone was talking about how, they feel like every time they take a break or something like that, that's when the big opportunities are. But that's all a state of mind. That's not necessarily true. Like, we always look at a time we didn't trade as, oh, it's so obvious. Had I been there, I would have made so much money. When, we don't know at all what we would have done, right? Nobody ever thinks like, wow, I really miss getting run over by that. Or I would have done something stupid and chopped it up. We always get to be our ideal trader, hypothetically, when looking at the past. So if you take time off, don't let yourself fall into the trap of making yourself not miserable, but even less happy by thinking about, oh, I missed this rally that I wanted to be part of or whatever else.
Take NASDAQ, prime example. How many people didn't trade today and wanted to look at them and go, oh, I would have totally bought that on the open last night at 5 o'clock. I would have sat on that until close today and I would have made all this money. Pretty easy to do that in hindsight. But what happens in the in-betweens? Where do you get shaken out? What do you miss out on? Do you get a little anxious? Do you have, fear in that trade setting in that means, hey, I'm actually going to close this? You never know what was really going to happen once you're in that trade. So, just because the market moved didn't mean you missed something. Look at it, look back and go, oh, that's a great indication for an opportunity. Next time I see that, I'm going to keep a close eye on that.
Yeah, I promise you that we don't like to make predictions about the markets, but here, I got a good one here. There's going to be a whole bunch of days in the next year where the NASDAQ is up more than 300 points. There's going to be a whole bunch of days in the next year where the NASDAQ is down more than 300 points. It's, whether you'll do well on them, that's kind of, that's the spiritual luck part of trading. But there's always more opportunities and will continue to be them. So don't beat yourself up over not being there.
It's like my dad always said, don't ever let one day or one trade make or break you as a trader. So you miss one day does not mean you're going to miss your opportunity to become a successful trader. And sometimes missing that one day is going to protect you. Sometimes the biggest opportunity in trading is not trading at all.
I can speak for that. There's 1 year in particular and 1 month in particular that I really wish I had not. It would have, and you know what the problem was there is that I felt myself in a position where I had to trade, had to make something happen. And then you end up like, the bad Kobe Bryant mode. It's like the trading version of chucking where you have one of those 1 for 23 performances from beyond the arc. And that's what happens when you force things, right?
You don't force it. I cannot stress enough, set time for yourself this summer. The miserable months, they're around the corner, especially, if you're in the North or in the Midwest. We had snow 3 weeks ago, so it's around the corner. It's not that far off. So get out and enjoy a little bit this summer. Treat yourself, take care of yourself. I love the topic. Mick brought it up. I think in Coach's Playbook last week was the idea of even when you're struggling, if you've had a bad day, like treat yourself. No matter where you're at this summer in your trading, treat yourself. The good times, you got to get out and enjoy them. I'm not that old, but I've heard a lot of older people say to me, if only I did more when I was younger. So get out and enjoy it while you can.
Good point. Dan, where are you going to? Anywhere special this summer?
I'll be in Lake Geneva a lot this summer. I'm heading out tomorrow afternoon, probably as early as humanly possible. And I plan on being on the boat all weekend through Monday. Really looking forward to it, putting up the American flag on the pier and our Marine Corps flag on Monday. How about you, Jack?
I just learned a few minutes ago that I'm going to be in Seattle in like a week. I forgot about that trip. That's what happens when you have kids and stuff like that. So I'm sure it'll get nice in here in Chicago just in time for it to be probably a rainy mess or something in Seattle. But you know what? I'm not going to let that bother me, right?
Good.
It's summer, so I'm not going to think about it too hard. That's what I'm up to.
Dip out, play a little golf, get on the water. And I got to say, Will made a comment that's very unmusky of you. I forgot we talked about musk earlier. I will be musky fishing probably this weekend. So I thought you already knew my weekend plans. So I misread that one.
I think it's sort of the volume of, and it'll happen some more in the next few days we get set, but I think this is all for the best. So, Dan, I think that's what we got to say on this one. So let's let everyone go out and enjoy the weather right now.
Yeah, get out and enjoy it, everybody. Have a really nice weekend and enjoy your Memorial Day.
Stay safe on this Friday trade tomorrow with the debt ceiling. You know, if you're going to buy, just listen to what we said earlier about the stop stuff. Just don't put yourself in a position to get bashed going into a holiday weekend. That's no fun.
No.
So with that in mind, stay safe, have fun, namaste, trade well. We'll see you next week. Goodbye.